Hey, what's going on, guys? Today is Monday. It's about 2:32 p.m. Central Standard Time. It's a beautiful day here in the natural state, which, for if you guys don't know, that's Arkansas. But anyway, um, this is the strategy that we talked about in the last video. So I'm going to demonstrate that on a live chart, on the live chart, live account, real quick. Um, and what we did here is we just put, I think we put a little over 50. I was trying to get it right at $50 into the account. But you guys know that there's fees involved. So what we end up doing is putting slightly over the amount in the account. So right now we're trading with a balance of $52.93 just to demonstrate this strategy. And I'm going to wait for price to pull back within 10 pips of this area right here, or wait for it to actually touch this area. And then we're going to jump in, and so we'll probably end up, let's see, getting in this trade around this level that I have marked on the chart. By the time price moves down, this should have came up just a little bit, and then we're going to get in this and carry it 15 pips or higher. I'm sorry, 30 pips or higher. So I want to demonstrate and if you guys haven't seen the video, it's this video right here, 60 pips every single day in the Forex market. This is where I fully explain the strategy. But this video that I'm doing now is pretty much for demonstration purposes. So hope you guys enjoy it. I'm going to now pause the video so that I can wait for price to come down to the level we're looking for, and then I'll enter the trade, and then I will restart the video. It does happen real quick, then I may not be able to capture it before I jump in, because price, it's this level right here is kind of like this is support. So when price comes here, it may be looking to bounce off of support instead of going lower and go. And if it hits this level right here, which is support, I mean, you only have to go right here to grab 30 pips. So it may hit this level, then pop up real high, real quick, and then pop down before it decides to trend up or trend down, whichever way it plans on going. All right, welcome back. The time is now 4:29 p.m. and right now, as you can see, I'm in a sell position at 50 cents per pip, or 0.05. And the idea behind this was to enter into a buy position once this touched this line right here. However, I missed this move right here. I missed this move right here. Price came up, and then I entered a I entered a sell position because I am going to catch this when it gets down to this level right here, and I will enter a buy position at that point. But because I'm waiting for the market to go down, I figured I would just enter a sell position, since that's what I anticipate anyway. When the market go down, I'll close this trade out, and then I will enter a buy position. And as you can see, I was charged swap of 10 cents, which is not a big deal. So this position right here, I will close it out only at about I don't know, maybe $1 or some change, but I just put this position on just because I am waiting for the market to come down, and I believe the market will come down, so that's why I put that position on. So check in with you guys just to show you why I put this trade on, because I put this trade on just a little while ago and I wasn't watching, and I did miss this move right here. This actually happened, I believe, right before this candle opened. So even if I would have put this position on right here, the market is up 14 or 15 pips, but the spread is still completely off because it's between 4 and 5 o'clock Central Standard Time, and that's when the market pretty much rolls over. So we will check back in, and this is going to get kind of strange. As you can see, I'm in a sell position. This is going up, but this is actually looking better. That's just because of the spread. So the next hour or so, we will see this probably come down to this level right here. I'll close this out for a very, very small profit. And then I will jump in for the buy position as we anticipated using the strategy. All right, so as you guys see on the screen, I initially had that sell order going, waiting for the market to retrace or pull back. And I opened up a series of buy positions. So as you can see on the chart here, it was those sell positions, and then I closed those out, and now I'm into a series of buy positions because the market came down, but then it came up just a little bit. Now I didn't get in perfectly at the moving average as we wanted to, But we did get in anyway on a buy because we normally would catch it at the 70 period EMA and then wait for it to go up 30 pips. Well, we just got in late. So what we'll do is we'll just carry it up a few pips before we close out the trade. So that's what you guys are looking at on the chart right now. I got in probably around this area right here. And then, if we take that up, let's see. So that'll be a few pips. So as you can see, the profit is actually looking pretty good compared to the account size. All right, so what we're going to do is at the end of the video, I will go over all of the trades because I wasn't able to capture the open and close of all of the trades. But as you can see, the trades that you're looking at right now on the screen, they were running. We did close it out in profit. The reason why we opened up so many trades instead of one single trade is because the market, we was in late and the market was kind of going down and coming up just a little bit. So to maximize our position and try to bring in a little bit more profit, we just stacked on a slightly bigger account position because we were confident that the market was going higher because this is actually what we were waiting for. So we will you'll notice that these trades are closed out, and then we will jump almost to the end of the video. And basically what we did for the rest of the trades is we actually, when this went up, we actually, and kind of worked itself out, pulled away from the 70 period EMA. We didn't hold this position. So what we did, and you have to remember, the time period we're trading was from 10 o'clock to 1 o'clock, or about 1:30, sometimes 2 o'clock. And the reason we did that is because in 10 o'clock, at the 10 o'clock hour, you kind of, and this is Central Standard Time, so you kind of look at the market, kind of gauge where it is, where it may go. But as soon as that 1 o'clock candle opens, that's when you'll notice the market takes huge moves. So we weren't able to necessarily close out all the positions and go to sleep and and I'm talking 1 a.m. in the morning. All right. So we wasn't able to just shut everything down at 1 a.m. because at 1 o'clock, that's when the candle starts. And then it starts making these big moves right around 1 a.m. in the morning, between 1 and 2 o'clock. So we were hoping to catch a pullback and hoping to have a lot of different stuff working for us. And notice that the stochastics is actually rolling back to the upside while this is bouncing off of that 70 period EMA. So that is a great sign. So that tells us that price will pop up to the resistance line that you guys see on the chart, and that's where price is headed now. The only other problem with that is these trades need to be monitored. So do you want to stay up to 2 and 3 o'clock in the morning until it hits that mark? So that was the issue for me. If I wanted to stay up long enough to watch this and monitor this, and I could have got in and stayed in until the market popped all the way up, but I didn't want to stay up that late. So as you can see, we're making pretty good profit, but we'll let that ride just a little bit, then we'll close the trade out. All right, guys, so we're at the end of the video, so let's go ahead and sum up what we did here over the last few days, or really over the last week, because I'm recording this video, this last final piece. This is 4/17/2020. Today is Saturday at about 6:54 p.m. Central Standard Time. Central Standard Time. So, as you guys can see, we deposited the Bitcoin, or $52.93 worth of Bitcoin, or via Bitcoin. And then we took those initial trades, and remember, we were back around this area right here, I believe, or actually maybe back around this area right here. We missed most of the setups, if not all of the setups. We did get in late on a few of the setups, but overall, we were waiting for this to. What we did is we marked our support and resistance lines. We drew our trend lines as we discussed in one of the other videos on the channel. And then we waited for price to go up, and we were waiting for price to come back down or retrace and go back down. So as price went back down, we entered a sell position. So that is why you see the sell positions here. Now when price came down, as we attempted to catch price at the bottom down here, we pretty much missed the move and price had got away from us already. But even though that took place, we still jumped in and carried the market up. So that's why you see the buys in here. And that's what we did. All in all, the majority of the trades we took, as you can see, were sales because price had pulled away or rejected at a resistance level, and then we jumped in with a bunch of sales or a few sales and caught the market back down, and that's why you see these sales right here. So that was pretty much the strategy. As you guys can see, we deposited the $52.93, and then the profit itself was $54.05. So a little over 100% in 1 week, which is not too bad, although we were not able to catch the setup that we were trying to demonstrate in the video. So we will at some point make another video. I'll try to catch the market when it retraces and when it pulls back to the 70 period EMA so that you guys can see what that looks like. But I also wanted to point out that it does look simple in one of the other videos I posted when I'm explaining this strategy, the 60 pips per day strategy. It looks simple, but it's truly not simple because you have to watch the market and wait for the setup to occur. And that means watching the market, even if that's early in the morning or in the early morning hours, like 1 a.m., 2 a.m. Because remember, I told you guys I actually took most of these trades between 10 o'clock and really 10 p.m. and 1 a.m. or almost 2 a.m. in the morning or 1:30 a.m. in the morning, because I had to let the 1 a.m. candle get a little movement before I got out of some of these trades. And I did not want to go to sleep and let the trade run overnight where I was not able to hold it, because it was not a position that we were necessarily looking for. These are short-term positions on an hourly chart. So anyway, I wanted to sum the video up and show you guys these trades. You can look at the times here. I'll scroll back up, but you can look at the times over here and the profit. And if you wanted to see exactly where I got in versus where I got out, here's the data for that at the bottom right here. All right, so you can see the account balance started at 52.93 and now it's up 106.98. All right, so thank you guys for watching. If you have not already subscribed, please take a quick second to subscribe before you click off the video, and also make sure you like the video. All right, talk to you guys later. Peace.